Hello classmates, my name is Anthony Gant and I'll be reviewing with you today our LinkedIn case study from Harvard Business School, in which I completed with Team 5 in our Finance 5503 course, Real World Finance for Managers. At any time during this case overview presentation that you have any questions or would like to see any additional research based on our models or figures presented, I have taken the liberty to provide a note section in this presentation to help guide your thoughts with additional links and references embedded within. All of this information was provided to the professor should you have any additional questions. LinkedIn case study for the overview. From reading of the case study within your groups, you should be aware that the LinkedIn Corporation stock price has recently dropped by 52% early this month, February 2016. Spectators and investors are questioning LinkedIn's potential growth and their ability to keep afloat. Many contributors in the recent days have questioned their business model approach. Our group applied the comparables and DCF valuation models to come to a conclusion to not give up on LinkedIn just yet. Information presented by Yahoo Finance on February 8, 2016 shows that LinkedIn could be underpriced by almost $69 per share. As my group mentioned in our case report, this model is only as good as its similarities are among the choice of comparables. The article by Liar R. Clay, Investor Place contributor, in investorplace.com shows much more detail. At this point, should you stick it out or sell? Lenar R. Clay, Investor Place contributor, released a statement on February 12 indicating that the way of social media stock is plummeting and everyone should abandon ship with the exception of Facebook at this time. The author claims that the business model itself for social media companies isn't working and the stock drop is case in point. However, I would disagree with this premise on the basics of logic and details. Based on the group's review, Team Number 5 analyzed the growth and continued potential of LinkedIn, and it's our view to master a broader view of investments when looking to be cautious of loss. As you can see, there has been great growth strides for LinkedIn in 2015 alone, with increased sales and premium subscriptions. Further, with the acquiring of lynda.com, the company is moving into a better position, but has work to do with its strategic planning. As you can see here in LinkedIn, the Q4 earnings, as we have reviewed, LinkedIn stock crashed to a 3-year low as reviewed in this chart. This is reported by Shutterstock.com. We also learned here that the Q4 earnings that exceeded expectations. Further, their Q4 revenues of $862 million topped the consensus estimates, up from 34% earlier in the year, as referenced by Brian Diggin, Shutterstock.com. As discussed throughout the case, you begin to wonder what might be the reason for the drop in stock. As seen here, Recode.net elaborates to the unsettling guidance tip for the LinkedIn's audience. As mentioned, the company is still adding new members. We can see that through our review, the bad news came at a time when public markets are reacting aggressively. Overall, LinkedIn came through with a strong end in 2015. This made a significant progress on product innovation with the launch of the new flagship product and a restored hiring product portfolio. The growth potential and the expected revenue makes LinkedIn a bargain buy at this current time. This was relayed in detail in our group's case report. Despite LinkedIn's recent setback, the company is growing and still showing much potential. As seen through this chart, viewer growth is climbing, which added to the fact that their growth potential has not yet reached a climax. As mentioned, our group constructed this DCF model. This model's projects the company's future cash flows and uses the present value method to find the value of the firm. This DCF model takes into account all capital held and is not solely based on sales or revenues. The group conferred that it is a bargain buy at the present time. If investors were to buy today, even with all this abandoned ship from contributors attacking social media companies, it is believed that the return on investments would be sizable. Further, the comparables method used assisted with providing insight, and our group determined that LinkedIn is undervalued. The hype over reacting to social media companies are charged is not a true statement. Using the DCF and comparable method is not certain. However, these valuation models provided some insight that can be used to suggest results that LinkedIn is still growing and their potential has not yet been reached. Any investor today should at least consider buying into LinkedIn. Our group's evaluation provides solid evidence through research and analysis that LinkedIn has potential for more. Portfolio diversification is to battle against risk. Keep in mind that this company has solid plans for growth and their market has not yet fully been tapped. If you would have any further questions, please do not hesitate to contact me or any member of my team. Best wishes as you finish out this course. Thank you.